Imagine buying a home where the bottom unit pays for the entire mortgage. You don't have to worry about your mortgage payment. We did just this for a client in Pittsburgh, Pennsylvania that closed this month. My name's Dan Friel. I work for Barrett Financial Group, and my whole goal is to educate you so you can get to where you want to be with your home ownership, whether it's investment, growing your wealth long term, or just getting into a home first time. We're here to help. So in this video, we're going to talk about what a purchase using an FHA loan looks like if you're looking at a 2 to 4 unit property where the other units are rented out or will be rented out, what an FHA mixed use loan is, and then at the very end, we're going to go over what a FHA renovation loan looks like for a home purchase and how you can use that for a 2 to 4 unit purchase or a mixed use property that has that commercial unit on the bottom or the top. So let's get right into it. All right, so first up, FHA purchase on a 2 to 4 unit property. You can put as little as 3.5% down on these, which is crazy. You have to live in one unit though. And now for the other units, let's say if we're looking at a 4 unit property, the 3 other units, if they're currently leased out, the selling agent can get you those lease agreements, and we can actually use usually 75% of the income being produced off those other units to help your income, to help you get over the hump to qualify, which is huge. And it's really like any other FHA loan. Your debt to income ratio has to be in line. Your credit has to be okay. Usually over 580 is the minimum. I mean, higher is better. Rates will go lower as your credit score is higher because it's a lot safer to lend you the money if you put on the lender's hat. And then assets, you got to have the funds to close. But in this case, 3.5% down is all you need. Now, if you're one of the people that are looking to do this and your credit score is below 580, so if you're at the 500 to 580, first of all, I hope you have a plan to work on that. If you don't, you can reach out to me and I can discuss different ways to help improve it. But if you are in that bracket, 10% down is going to be your down payment. So you get a little bit worse of a program, but you can still do it. And again, if you think about, if I'm going to lend my money to someone, if you put the lender's hat on, the lower your credit score usually means that, hey, it's a bit more risky. So you got to pay for that risk. But in any case, if you have a W-2 job, that makes it super easy to qualify. If you're self-employed, it's usually 2 years tax returns for this program. And they average the net income. So after all you take out all your expenses, that net income over 2 years is usually what you qualify for the home, for your income portion for self-employment. And that's really it, right? So if you can qualify for an FHA loan for a normal home, you can do this as well. And the coolest thing is you can have other people help pay your mortgage because you're buying an income producing property. It's huge. The next thing is an FHA mixed use property. So what does that mean? All that means is there's some commercial space in some portion of the property that you can rent or lease out along with the residential portion. So all the other rules remain the same. The client we just had buy this home put 3.5% down. There was a business down below paying for the whole mortgage basically, and it was a 1-year lease agreement moving forward. So he moved in to basically free lunch and they paid for everything. Now, there's a few things to consider though. With a mixed use property where there's a portion of commercial, FHA requires you to have 51% or more of the total area of the home be residential. So that just means it has to be more residential than it is commercial. And the appraiser is the person that kind of deems that and looks at that. Sometimes, or most of the time, they'll add the stairwell into your favor of the residential area, but it's something to look at and to plan ahead for before you go ahead and put an offer in. And then another thing is homeowners insurance. Lenders generally like residential insurance policies on these mixed use properties, but there's an issue. There's a commercial area. So a lot of lenders will go back and forth and say, hey, we want this to be residential, but the insurance companies will give you only commercial policy, and they'll kind of butt heads. Give the right information to show that the home was covered and the lender was safe, and we got the commercial property insurance to be used, and we got the place closed. So with these different programs, especially mixed use, there might be a few more hurdles to jump over if you're comparing it to just a normal single family home that you purchase and boom, it's done. It's very vanilla. There's a few more things to do when you spice it up and you say, hey, I want to build my net worth but buying a home that has rental income coming in that offsets the mortgage, I mean, it's a brilliant idea, but there's a little bit different details you have to consider. Okay, so the last thing I want to cover is we talked about the FHA 2 to 4 unit purchase. We talked about the FHA mixed use properties, but the cool thing is you can do a renovation loan for a purchase on either. And the biggest thing is if you find a home and let's say the mixed use example where there's a commercial space down below, residential up top, you can do a renovation loan on the residential portion of that mixed use property. So you can fix it up to your liking and finance it all within the purchase. And the best part is it's 3.5% down still. But the contractors have to be FHA approved and there has to be a little bit more planning with this, but you can really do whatever you want as long as you're within the guidelines of the FHA. So we've had people buy these properties, they put a new kitchen in, they make it exactly how they want on the residential portion of the loan or of the property, and they close and they get all the work done and they have their dream home with their mortgage being paid from somebody else from their income producing units or like an office space. So it's really endless. Not many people talk about these things, so it's important for you guys to know. If you have any more questions, reach out to me directly. My website's in the description. Call, send me an email. Like, I am here to help you no matter what state in the country you live in. Again, my name's Dan Friel. I work with Barrett Financial. We're a full team here doing a ton of these every single month. So each video serves to give you a little bit of information to make your experience a bit better before you even start the process.